After all of the concerning private reports that we got during the government shutdown regarding the labor market, we finally got some government data today. It is Thursday, November the 20th, and this is Markets with Megan. If you like this podcast, subscribe, hit the alarm bell. Also, share it with friends, family, or colleagues. We're excited to be back to go over the economic data now that we're starting to get this released from the government. And today was the much anticipated September jobs report. And this jobs report came in better than anticipated. The U.S. economy actually added 119,000 jobs in September, and that was better than the 51,000 that was expected. In fact, it was the most monthly job additions since April of this year. The unemployment rate did tick up, though, slightly to 4.4%, and that's the highest since October of 2021. So a mixed picture there a little bit when you look at the rate compared to the payroll additions. The average hourly earnings, although they were unchanged at 3.8% on a year-over-year basis. And let's dig into some of the job additions where they were concentrated and then where there was some weakness. So we did see that there was a decline in professional business services. Temporary help, we've talked about that in the past. That can be a leading indicator for the future conditions of the labor market because you'll lay off temporary workers before full-time workers. When you look at manufacturing, trade, and then the federal government lost jobs for the month. But there was still big increases in when you look at healthcare, leisure, and hospitality. So the leisure and hospitality sector means that there still is consumer spending on that experience side of the economy. When we look at the participation rate, that actually rose to a 4-month high. So we are losing some of those workers due to the crackdown on immigration. But the good news is what we did see was that participation rate rise specifically among women. So women are re-entering the workforce. Now, this is the last employment report that the Fed will get but before their December FOMC meeting. And coming into this report, it was basically a little bit less than a 50% chance that they would cut interest rates. I think that still stays there. We think the Fed should actually pause at this meeting, assess the amount of economic data that's going to come in pretty rapidly as the government reopens. I think the Fed does have the ability just to step back, let's pause, let's assess what's going on with the labor market, but specifically, let's start getting more information around the inflation side of the economy. We do have the tariff impact. Remember, tariff impacts in inflation do act on a lag, but we haven't really gotten any of the data to show specifically what it's doing to inflation because the government's been shut down for the month of October. Now, the markets are doing fine today. This is primarily on the heels of the strong NVIDIA earnings that we got last night. So you are seeing some move back into that tech momentum trade again. But we'll be back again where there's going to be a lot of economic data. We'll be back next week with plenty more reports to give you. But if you like this podcast, please go to our history of them. And that's on marketswithmegan.fm. Thank you.